Hey guys, welcome back to the Capital Mindset Show. We are your hosts with the most, Austin and Fabio, and today we're going to be talking about Zillow, ticker symbol ZG or Z, whichever one you like. We indicated in a prior video that the difference between ZG and Z is, I believe it's voting rights. One has voting rights and the other doesn't, but that is aside from the task at hand today, which is basically Fabio has an announcement to make about Zillow. And so we're going to be kind of picking his brain today, and I'm going to be asking, the pertinent and relevant and great questions. So without further ado, what are we looking at here today?
All right. So today we're going to be talking about Zillow groups and kind of what's changed, right? So Zillow, for all we know, or how we are calling it on this channel, it has the potential to become a Google style company in regards to real estate. I know that sounds like a buzzword, and maybe it is, but the point is, look around you, look around in your life. How many people around you, when they search up a home's value, their neighbor's home's value, they go on Zillow? I know pretty much everyone in my inner circle kind of does that. So, and I know frequently a lot of people that I meet over time, they like to do that as well. So Zillow also has the numbers to back it up. They have about 200 million viewers per month and about 30 million unique viewers, which means those 30 million are visiting more often than just once. And they've recently done a change. So I've actually just go ahead and let's show the price action. So this has been abysmal. And this was my problem with Zillow for a long time. And Austin, we mentioned this in the first video on Zillow. The problem we had with Zillow was the iBuying business. And
would you kind of summarize what the iBuying business was, and then also sort of why that was a problem? Because I saw a lot of people that were incredibly bullish about the iBuying business, but you were thinking outside the box. You're like, nah, this isn't exactly something I'm overly excited about. So would you kind of explore that a little bit with the audience today?
Yeah. So iBuying, basically, it's the idea that you can create an algorithm that allows you to buy and sell homes at hopefully ideal prices. And the strategy that Zillow was kind of doing is they were doing a vertically integrated approach where they could sell the home at break even and they could still make money on that. And then that they would do so in volume. So then that would make up for it. However, the problem with iBuying is, well, you're making an assumption that you're not going to be buying at terrible prices. Because if you're buying at terrible prices, which is actually more likely because real estate as a asset class is unique in each geography.
Yeah, right. I was about to even comment. It almost seems as if iBuying was almost trying to commoditize the real estate market through like a software, rather than taking into fact that the real estate market is by its very nature a unique asset class. So I was literally about to ask you that question, but you kind of answered that question. So please continue.
Well, because real estate is non-fungible. So non-fungibility is key. If you have a fungible asset, right, then there you can probably create some sort of algorithm.
Well, what does fungible mean?
Fungible is like, okay, so the house you live in now, Austin, you live in some house. And then if I look at the price or the market price of the house right next to you, what do you think that they're going to be exactly the same down to the last penny?
No, likely not. There's a multitude of different factors that go
precisely. So if you were to say, hey, neighbor, I will exchange my house with your house, would that be a fair trade? That would be
sorry.
That would constitute fungibility. So fungibility is like, I have a share of Zillow stock. You have a share of Zillow stock. They're the same. We can trade and then we both end up with the same thing. But in a house is a non-fungible thing. So remember NFTs, non-fungible tokens. Well, homes are non-fungible tokens in a way as well, except they're physical assets. So the fungibility aspect makes it basically impossible. And I'd say I'd come out and say, yeah, I'm actually not. I'm very skeptical of Open Door Technologies, of OfferPad, all these companies that are doing this. I think it's a terrible business. I would never be involved with that.
Oh, okay. So this actually makes sense then as to why you were incredibly bearish in the iBuying business that proved not fruitful in this instance. And then also too, why you're avoiding Open Doors specifically because of the fact that they are trying to almost commoditize an asset that really can't be commoditized.
Yeah.
So, okay.
So that's why I was remember we first talked about Zillow, you and I. And we saw that, for example, someone like Rob, the popular investor, who's an intelligent person. He was very bullish on Zillow while they were still doing the iBuying. And I
Mhm.
commented to you that the part of the business I absolutely despise is the iBuying. And
Because of exactly what we just talked here. That makes
yes,
perfect sense. So
yes,
that was really the inhibitor from you being like, okay, I see this company that is almost at the point of a household name, at least within my inner circle. Everybody uses it to shop for houses, et cetera, and so forth. But then they have just this, like, the one red flag that you can't pursue the
yes,
uh the
yes.
investment because of that. But then they X'd that red flag. So now this brings us to our special announcement, or the purpose of this video, which is, and I'll let you do the honors here.
Well, people by now know they've exited the iBuying business. And we were
Mhm.
talking about that in the last video, that how that was a really good thing. And the market was pessimistic about it. But now, so things have changed. I have switched from someone who is not skeptical, but more of a speculator on Zillow. And I've done really well with my speculative position. I added actually not too long ago, but I missed out on a decent amount of gains already, you could say, because I could have made it a bigger position. But now I'm okay with coming in a little bit late. I've been adding in the past couple days, like since last week. And what's changed in my opinion about Zillow is now I can see the vision of what they're trying to achieve. So now I've switched from a speculator to an investor. All right.
Mhm.
Because I'm analyzing their plan and I agree with their plan. I think it's feasible. So I'm
Okay,
willing to
so
put more capital behind it. And I feel like I can understand what is there. Because we were discussing, right? I
mhm,
told you what I wanted Zillow to do. Well, guess what they're doing now?
they're doing exactly what you wanted to do.
They're
But would
doing
you
exactly.
enlighten the audience? What is the vision that you now believe that Zillow will
Look,
execute upon, that
they have
management at Zillow wants to execute upon?
they have a funnel, right? So they basically control the users, right? The users go on Zillow. Okay, that is a tremendous amount of potential value. Now, what I was kind of upset with them about is they were squandering it with this iBuying, right? I wanted them to be the asset light business, the website, the software, the service that allows a more seamless transaction within real estate. I want them to be a company that allows the user, I go on Zillow and I can get an agent very quickly, get my title insurance, get everything, the closing costs all settled, get my mortgage, the whole shebang. I wanted to do the whole thing on one place, make it very easy for me. I don't want to have to think about it too much. I just want a
Okay,
home.
so all right. So then from there, now I kind of have two more questions. We indicated in one of our prior videos on Dropbox, sort of this notion of software businesses, you like to kind of see them be platform agnostic. Is that something that we can apply here to Zillow as well? And then also through everything that you just described, how this is sort of a funnel-based business system, would you want to see in this instance then that Zillow focuses heavily on commissions and commission-based things?
Yes, exactly what I wanted to focus on. Commission based, asset light. Take a piece of the transaction. There's a lot of money in commissions in the United States and in the
Mm-hmm.
world. If you're taking a piece of it and you're just being the arbitrator of commerce, that is a tremendous amount of power that Zillow will have, and they'll have the benefit of scale. So like it's kind of like a flywheel effect. The more people go on, the more valuable it becomes. The network effect, actually, that's the proper word for it. And Zillow again can become that Google style company of homes. So I search for homes on Zillow and I can find a home. I can get the Zestimate. I can get in contact with an agent. I can get my mortgage. I can get my title insurance. I can settle the whole thing right through Zillow. Zillow becomes the platform. Zillow can become the broker for all these agents. That's what I
Okay, so
want Zillow to be.
Zillow, your vision of Zillow, just summarize everything, is it becomes the one-stop shop, asset light, basically relies, or doesn't exactly rely, I don't know if that's the right word, but has a substantial part of their business model on commission based. And now you're kind of seeing that management is indicating on going in this potential direction, which is why you've now changed from a speculator to an investor in Zillow.
Yes. And I
Okay,
think from there,
perfect.
there's so many more things they can do and develop from there, but they're going in that direction. And now I can switch from someone who's a speculator, because when I put something into the speculative bucket, it's either things that I cannot control right? So I've mentioned a couple companies in the past that are in the speculative bucket, and it fits those criteria. It's things that are outside of my control, outside of the company's control, and or I cannot envision something. It's something like I can see if they go in this path, but I don't know if they're going to embark on that path. And then
Yeah,
I could be wrong, by the way, on
yeah.
the path I want. But when I want a path, I kind of stick to it. I have confidence that I can kind of decipher a path that I'm comfortable with. And then if a company is going on that path, I can put money behind that. So Zillow is
So
doing that right now.
yeah, and now kind of my other question too is that
Yeah.
now we've seen the vision. You're confident that Zillow could potentially execute on this vision. What
Yes.
are some of the risks present here that might inhibit Zillow's ability to execute on this vision?
Yeah. So I think now the risks are a lot less because my main risk and why I wasn't investing in it for a long time was the iBuying business. I remember once they got out of the iBuying business and we had the big drawdown, and when the market was getting pessimistic about them leaving the iBuying business, I was loving it. I was like, oh, now I'm going to reevaluate Zillow. So the risks are now their competitors, but I think their competitors are killing themselves with iBuying. So the competitors, I think Redfin has a decent chance, a decent shot. Also, not to dismiss them, but Rocket Mortgage. Rocket Mortgage also has a decent ability to compete in this if they can execute well on their own platforms. However, I'm just mentioning them to be nice. I don't actually think that they have a chance, if I'm being frank with everyone,
Mhm.
because of the scale that Zillow's at now. So Zillow is kind of going to take a more hands-off approach. Redfin is more hands-on, so the scalability won't be there. You would have to expect that Redfin will become perhaps by far the largest broker in the United States, but it has to do so by opening offices, hiring employees, et cetera. So this takes time. This is very expensive and very risky because everyone's salaried at Redfin, not
So
commission based.
now another question, and this is sort of a broad question, as in like just industries in general. And this kind of has to do with exactly this scale to Zillow that you're sort of mentioning here. My question is sort of, is there such thing as a scalability moat, if that kind
Oh
of makes
yes.
sense? And
Oh
then is
yes.
this most
Mhm.
prevalent typically in
Yeah.
industries such as real estate, or are there some industries where this is more prevalent than other particular industries?
Websites. No. So
Websites?
Zillow's a website. Zillow is a software. It's a platform. So platforms have scalability modes. So the bigger the platform, the harder or the larger the walls become. Because if you think about it in such a way, like, okay, so you're an agent and you want to make yourself part of a network. Are you going to pick the smaller network or the larger network? Which one will provide you the most leads? Probably the larger network. So you're probably going to join the larger network. And then if you have the best agents going to the larger network, if I'm a customer, where am I going to want to go inherently? I'm probably going to go on Zillow if Zillow can make the process easier for me. And then on top of that, remember how we talked about UI?
Yes.
Zillow's UI is so easy to use. It's incredibly easy to use.
So
I
all of these factors play into the idea of a scalability moat, which is
Yeah.
most prevalent typically in websites that offer convenience, easy to use,
Yes.
household
Yes.
names,
Mhm.
everything such and such.
Well,
So which also
why do they
plays into the
become
reason
household names?
too why you're investing in Zillow now, because Zillow has now kind of oriented themselves as legitimately just that commerce broker, where they just
Yes.
kind of take a back seat and they take a commission and they let the people and they let the producers do their business. Zillow just takes that commission.
Yes. So Zillow, yes, I'm now investing in Zillow. Before I was speculating on Zillow. So I had
Mhm.
a small amount of my portfolio, but as of last week, have been building a position and now I will consider myself an investor in Zillow. So my average
Wonderful.
cost is now in the low 60s. And I started buying in the 50s, but low 60s, I think is now my average cost because my new buys have been a little bit larger. And before, again, I didn't have that vision. I know that the company, the CEO, he actually just sold or closed out a deal to liquidate the entire real estate portion. So I want to actually talk about that. And this is kind of like a lesson on cash flows for everyone. If you're listening or you listened to the last video about Zillow, we talked about how the cash flows will temporarily be boosted and it will look really good. Don't be fooled by that. So the cash flows are going to look excessive for a little bit in the short term because they just unloaded all that real estate. So all that real estate being unloaded, that's a lot of cash coming in. Now, that's not necessarily a good or bad thing, because there could be losses on that cash because they were buying homes with that, right? And now they're selling those homes. So they could have lost a lot of money. And I think they did. So we want to be careful with our cash flow assumptions and say, okay, well, we know there's a lot of cash coming in, but that's not going to be the continuing going forward. Now, I do think going much forward into the future, that Zillow will have a tremendous opportunity to generate tons of free cash flow, again, through all these businesses that they own, and they're taking commissions off the top, and it's going to be
Okay.
asset light. Okay.
Okay.
But
So now I kind of have a couple of more questions here.
yeah, throw
My
them.
first one is, especially in regards to these cash flows here, is there a process by which we could normalize these cash flows, or at least
Yeah.
estimate to normalize? And then also, is there another process by which we could kind of estimate some of the losses that are present inside of these cash flows here now?
Well, they'll tell you the losses through the net income. So you'll see the losses on the GAAP basis. Remember, I say all the time in the videos, it's all nuanced, whether or not I like GAAP for a company or whether or not I look at the cash flows. It's nuanced on the industry, on the company, and the timing, right? Context on what's going on in the moment. So this is context that's going on in the moment. The cash flows are going to look good, right? However, you can also say that the cash flows will reflect the loss in net income, because remember, cash flows, the first line item is net income, and then from there you add on the non-cash expenses. So in the net income, I'd pay attention to there to kind of see or get a feel for what's the impact of the loss on the sales of those assets, right? So you'll see that in the, because they categorize the homes as inventory. We looked in the last video that on their balance sheet they had a tremendous amount of inventory on the books. That's all real estate. Now when they go to sell that, they're going to get a bunch of cash, right? But just
Some
see.
of that might also have losses because they might have purchased that for more than what they're receiving. Okay, cool.
Yes.
So kind of taking it back to the free cash flow now that you kind of mentioned earlier, is it true that because Zillow is moving more towards an asset light position as a business, this will contribute to a greater amount of free cash flow that could be returned in the future to investors in this particular company?
Yes, because an asset light business tends to have less maintenance cost. When it has less maintenance cost, the ability to have high margins is fairly easy. And the thing that's beautiful about the business that they're entering, it's going to be inflation resistant, because it's going to be, yes, because it's going to be, they're going to engage in a commissions based business, which is real estate, right? So if home prices rise due to inflation, right, asset price inflation, Zillow's earnings will go up alongside that, and pretty much in direct conjunction with that. Now they're going to be directly tied to the real estate market from here on out. I mean, they've always been that. That's the decision they've made. However, they're not going to have a skin in the game per se as far as holding that real estate. So you're not going to have that extra risk that Open Door or OfferPad will have, right? Even Redfin, I bet they're going to maybe exit this position as well, because they want to succeed. And if they continue this iBuying BS, they're going to fail. And that's frankly, that's just how I see it. So if they continue in the iBuying, they will fail. And there's room for more than one player. I am not saying Redfin will die because of Zillow, and neither will the other die because of Redfin, right? It's basically, this market, Austin, is so big. It's so incredibly big that there can be many players, right? I just think Zillow is going to be the biggest, if not one of the biggest players.
Which also makes sense here too. And now I kind of have another question about how this specific market itself could have many big potential players in this. Does this kind of go into the concept of sort of segmented moats, whereby, let's say, for example, Zillow builds their business. They have this massive moat through scalability through their business. It's inflation resistant, everything. Let's say Redfin does the exact same thing. These two players could legitimately exist with threat, but for the sake of what I'm saying, without threat of causing the other to go bankrupt. These two players could exist. That's how large this market that you're indicating right now.
Yes.
That's basically what you're trying to say.
Yes, because some people will prefer the Redfin customer experience. Other people will prefer what Zillow will offer. Okay. That's just how it always will be. They're very distinct business models. At Redfin, you're going to be dealing with an employee who is salaried and has a different incentives. At Zillow, you're going to be dealing with not necessarily an employee. You'll be dealing with an agent. An agent
Basically brokers. Yeah, it's literally just commerce brokers on Zillow. Okay, so that kind of makes sense, because that adds nuance into sort of the competitors of Zillow too. So Redfin is going to be more so, because of the fact that a lot of them are employees, it's going to be more so client face. So it's going to be, oh, like, how can I help you? Let me shake your hand. How's your family doing? Blah, blah, blah,
and
blah,
they're going to
blah.
get paid either way. They're
Yeah.
getting paid either way, whether the deal
Yep.
closes, whether the deal
And then
doesn't.
Zillow, meanwhile, is like, here's John Smith, who is your real estate agent. You two talk. John Smith is going to ask you how your family's doing, and then we're just going to take 10% and not even worry about it.
Not 10%, but
Well,
I
I
think
mean,
they're
yeah,
gonna,
yeah, but for the sake of the example, yeah, just so I'm understanding this correctly.
yeah. And then there's another company that I don't want to dismiss either. That's another network that's building, but it's Exp Realty. So Exp Realty, I have my own problems with Exp Realty because of the way that they pay their realtors. It is extraordinary. I know this because I know some Exp Realtors, and I've had discussions with them about like how they're paid, and what are the commissions like. So the commissions are heavily favorable to the agent. Okay. Heavily favorable to the agent. But my problem with it is it doesn't do anything to change the experience for the consumer per se. It's a traditional experience for the consumer, but it's a service that's catered to the agents. So their strategy is get as many agents as possible, control all the agents, right? And then the thing is, with Exp Realty, you have to pay for the software. So you become an agent for them. You pay a yearly subscription fee for their software, and then Exp is going to profit in that way. And then you can be a not good agent, an agent that doesn't sell many homes, and it doesn't matter. And you know how many agents there are like that? A ton. However, if you're an agent that sells a ton of homes, they take less commission. They have like a cap on how much commission they take as your broker, and then you keep the rest. So after a certain amount, you keep the rest.
Okay. So now my next question too is just sort of exactly that. We understand with Exp Realty that they're sort of pursuing a strategy of where they are trying to basically agent capture. I don't know how else to say this.
That's
what is Zillow doing that allows Zillow to be different, and what incentivizes the agents to use Zillow? Would it be the massive amount of people currently using Zillow, et cetera? So like, what are some ideas here?
So this is, again, for everyone listening, think of this as the different business strategies. Like if you had a business, what is the strategy you would approach? Well, these are three different companies with three distinct strategies. Well, Zillow, what they're doing is the customer-based approach. So what they're doing is they're building the network. They're hoping that they build a network or a website, a platform where consumers go, and the consumers are the network. You are the product. You're going on Zillow and you're looking at these homes, and then they can funnel you through their pipeline and then get you to an agent. What I want to see going forward, and I see that that's their official plan now, that they're going to really work on fully vertically integrating the experience. And that's what I want. I want to be able to go on a website, look at a home that's for sale, talk to someone, get an offer, get my loan, as much as convenient as I want it to be. And the thing with Zillow is they don't have to give the loan. I don't want them to give the loan. I do not want them to be that player. They could partner with other, they could partner with the loan providers, right? And like, for example, UWMC, heck, even Rocket Mortgage, but like UWMC or Mr. Cooper, these mortgage brokers, they could partner with them and then take a little bit of a commission from that. And then they could push the risk all onto them, right? I don't want them to take on the risk. Same with title insurance. I don't want them to be a title insurer. I want them to be maybe way down the line when they're a huge, very large company. They can think about doing that. But
well,
in the meantime,
what is title insurance though? Like how would that, just to stop you there for a quick second.
No worries. So title insurance, for example, let's say you buy a home and you want to make sure that everything in the home is kind of accounted for. So for example, let's say that someone built a pool in the backyard and they didn't pay the bills for that pool. Well, the contractor doesn't just, go screw himself off, he will put a claim on the title. And if you're not careful and you buy the home off of the guy who didn't pay the bills, you are now liable for that title, because the because the claim is on the title, not on the person.
Oh, okay. So if I'm understanding this correctly, um, the claim would be on okay. So the claim is on the home itself. So then the way that this relates to Zillow would be if Zillow tries to sell a house that has a lot of
Oh,
title
no.
insurance on
The
it, it
one
might
who
be
the one who wants the title insurance is the buyer. And you pay the title insurance because the title insurance company will do the homework for you. They'll check the title and they'll make sure there's no claims. And then they'll say, we verify this, and if we're wrong, we'll pay you. But we've done the
okay.
homework, and so we're willing to pay you if we're wrong. And then that's the insurance part, right? They're going to pay up if they were wrong. And most of the times they're not going to be wrong because they don't want to lose money. So they're really going to do the homework. So then you're
Okay.
basically getting a guarantee that the title is clean.
So then would you kind of walk through a quick second again how this relates to Zillow, how the concept of title insurance relates to Zillow?
It happens in the transaction of buying a home. You get title insurance when you're buying that house. So if Zillow can be the platform where the title insurers can be there and be part of the transaction, very seamless. Again, like I go on Zillow, I can just do the full thing all by myself. I can go with my agent to go visit it, but Zillow like lets me do the mortgage and everything's seamless, one process. Then I also can envision them, partnering with title insurers, et cetera. And then you can do property insurance, different kinds of insurance from there on out. But there's so many different ways to get, partners. And trust me, all these companies, they'll want to partner with Zillow. Zillow has the funnel. They just have to capitalize on the funnel. I think they can. And now that I see that that's what they want to do, I changed it from a speculation to an investment.
So now let's actually get into the investment portion itself before we wrap up the show here today. We're talking about our favorite thing, our double A word, asset allocation. What is the strategy? You got to give us the tea. You got to spill the tea.
Okay. So pretty much before last week, I was nibbling on Zillow because I considered it a very good speculation, simply because they exited the iBuying business. And on that note, I thought there could be a possibility that they came to their senses, but I did not know when they would. Then I saw they executed on selling the homes, right? All the homes that they had, they did it. And then they said their intention, or they stated their intention to go in that direction where they're going to be the platform of home buying. They're going to become the platform. And they're going to take commissions off of the selling and buying of homes on their platform.
Okay. So focusing back to the asset allocation, you indicated that you were nibbling with current prices right now. So let's kind of talk about price strategy in regards to asset allocation. For which price thresholds are you currently willing to, as we like to say here, nibble, bite, or chomp? Which ones?
So the issue with that statement, again, everything's nuanced. In this instance, I decided that I would put a certain allocation based on what I perceive to be the risks. And in this case, I decided close to 5%. So 5% is the max allocation I have. And in fact, since there is no true projections I can really make on the cash flows, because simply put, they're attacking a market in something that is not really comparable. There's not really anything like it right now. So I can't really draw a comparison. I just can only assume over time, they are going to take from the existing real estate market, right?
Okay.
Sales.
And then, yes.
So I think long-term, the absolute potential is extraordinary. My heavy risks are not just the execution, but also the dilution. They are doing some buybacks, but I don't think that will last for a while, because again, I expect the management to use the lowest cost of capital, and I want them to do that. I want them to use the lowest cost of capital to fund the business expenses. If I still see the vision has to be there. The goal of getting to the point where you become the Google of home buying has to be there. If that at any point comes into question, I'm out. There's no questions asked.
Okay. So now I have another question. I'm bombarding you with questions today,
I
but
love
it's
this.
all. So my next question is, you indicated that there's a risk of dilution here. However, I'm kind of wondering if return on invested capital could play, basically if your fear of dilution would be mitigated should the return on invested capital be higher in that
No,
instance. No,
because the dilution is what matters in that. Because if the return on invested capital could be whatever percentage, but if you're being diluted a lot,
doesn't matter.
it
Yeah.
doesn't matter. That matters of capital returns. So like you don't want them to be engaging in buybacks or dividends if the return on invested capital is really high. So that's a metric that you can kind of look at, because that's telling you if they keep the cash, what is the return they're getting on that cash? And then you ask yourself, can I do better with that cash? And if the answer is no, so if your estimated return on your cash is going to be less than their ROIC, you don't want them to give you the cash yet. You want them to keep it and let it compound. And then in the future, because remember, the value of a stock, of a company, is the future returns that they can give you. Okay. So you want those future returns to grow as much as possible. And how do they do that? Well, they grow the business.
Mm-hmm.
And if they're getting a high return, let's say the ROIC is, somewhere in the 60s, are you feasibly going to get 60% return on your cash if they were to give you the cash? Probably not. So they're in their moment of growth. So they're going to do that, and you want them to do that. Now, Zillow still has to get to that point where they're producing a tremendous amount of cash. I believe the management has projected they're going to be cash neutral for the year.
Which also ties into why you love the fact that they're moving more towards just commerce brokers, because that is indicative and inherent on a substantial amount of cash coming into the business. And you like cash. You like the green,
I want them to focus on building that software, that platform, making it so easy, so nice to use. I want them to focus on the algorithm that helps them evaluate the prices of homes, but not participate. I do not want them to own or touch these things. They don't belong in that. All right. The only way that I would have enjoyed them to partake in that is kind of strategically, and they're not going to do this. And I if they do this, oh my gosh, things change for me, but they're not going to do this. If they were to engage in the slow and steady, you hear me, this slow and steady accumulation of real estate, that I would enjoy. As a long-term investor, I would actually like that. But I know they're not really going to do that because it's not very exciting.
That's at least to me, it almost kind of seems like that might be a contradiction to what you were saying earlier about how you want them to be asset light. Would you kind of explore that a little bit before I wrap up the show here today?
Yeah. It's slow and careful accumulation of real estate assets. But there's that added problems, because you're actually pointing it out beautifully. That then depends on like how they do that, because execution becomes a greater risk. So that's why I still stick to my guns and say I prefer them to be asset light, because I don't actually have the confidence that they'll execute that properly. So like, for example, companies like Blackstone, or even different REITs, right? So REITs accumulate assets slowly over time, or hopefully they're doing it slowly or strategically, keyword strategically, over time. That allows them to get good quality assets that can produce rental income over long periods of time. And I'm not just saying just residential, but again, Zillow's, in residential. So that's where they probably flourish the most. But that's not feasible. Okay. So like, let's be realistic, but that's the only way that I would like them to do it. I hate the iBuying business. It's ridiculous. It's ridiculous. Okay. The flipping business is not something that can be automated. Okay. Now you could say that their algorithm could become really good at evaluating somewhere where the home is. And if they did the slow accumulation strategy, that would be good over the long term.
Yeah. And data, there's a lot of, especially when it comes to algorithms, at least like current technology, there's a lot of difficulties in creating something to that extent that would allow them to basically predict where houses could potentially go. So I like everything that I've been hearing, especially too the fact that you want them to just basically remain as a commerce broker, not exactly owning assets, because you think that there's a substantial risk in execution. Now, my final question before I wrap up the show here today, what is a margin of safety that you're kind of thinking of here in regards to Zillow? Are you discounting this incredibly heavily because of the uncertainties that exist here right now?
Okay, so again, the projections are not going to be very reliable whatsoever, because there's nothing really to compare to. They're kind of reinventing themselves. This is Zillow 3.0. They did Zillow 2.0 with the iBuying. They recognized their mistake. And I'll quote a movie I kind of like. There's a couple ways to win in this game, right?
Yeah.
So you can be smart, cheat, or be first. And it's a hell of a lot easier to be first. Okay.
Yes.
And they were first. I love it. So I'm actually excited. You can kind of tell I'm excited.
Yes, I can see it.
Because
Well,
I'm so happy that they got out of that, Austin. I'm so happy, All right. Anyway. So the projections, cash flow projections, I don't expect them to materialize until later in the year. And like, that's why I'm capping it at 5%. So if I, for example, went down 50%, I would only lose 2.5% of my portfolio. I wouldn't really cry. I would not cry. Now, 5%, it's greater, for example, than a position like Alibaba and Tencent, which
we've made plenty of videos on that.
Yeah, we made.
So
that's
sort of like,
you should know why I'm invested in it. Well, I'm not even invested. I don't call that investment. Why I'm gambling on them. And then for the price action or the price move, which by the way, I think I accidentally bought the bottom of those two stocks.
That's funny. That's really funny.
Yeah. Well, not stocks. I bought the bottom of those two things.
Yeah.
Right.
Contracts of VIEs, for lack of a better term.
I bought the bottom of those VIEs, and we'll see if my thesis plays out, and it'll be a fun game. We're keeping track of it, and then
yeah. Well, I mean, it also gives you skin in the game too, so that like when you talk about the risks with these VIEs, especially with Chinese enterprises, it's not like you're just like ha ha ha, like you ha ha ha, like you actually have like money with this too. So, you're kind of suffering along.
Yeah, that was the point, because I don't want people to think I'm like enjoying their suffering or anything like that.
All right. Well, to wrap up the show here now, you are excited about Zillow. We've explored why you're excited. You have now changed it from a speculation to an investment. And then do you have any other personal closing thoughts before I wrap up this episode of the Capital Mindset Show today?
Well, I know you're invested in Zillow. How do you feel about this change of events?
Well, I mean, I'm actually pretty happy. Truth be told, when I first invested in it, it was a noob investment, so I didn't even really get any of this. I was just like, "Ooh, Zillow, buy." But now that I'm kind of learning more and I'm sort of seeing, then I too am actually pretty decently excited for the potential future of this company. But
if it executes, it could end up being a very good investment. I will just say
that.
If it executes.
Yes. All right. So with that being said, we are your hosts with the most, Austin and Fabio. This is the most wonderful and latest episode of the Capital Mindset Show. If you guys have liked what you've seen here today, please be sure to share the video. It really, really helps out the channel. Please be sure to like, comment, and subscribe. And also visit our website. You can submit analysis requests, read some of our articles at capitalmindset.org. We are your hosts, and take care.